going on? Finally, Rick the Dawn has turned back into Ritchie. Yeah, I practiced that. What's going on, y'all? It's been a while. I missed y'all so much. Yo, I felt the anticipation. I just heard everyone screaming like, I just heard y'all, and I heard y'all, and I heard y'all. So I said, you know what? I don't care what I want to drop as far as my own videos. I am going to give the investors what they subscribe for. You did not subscribe for music and comedy. You subscribe for investing. Here we go. All right, folks. As you know, this episode is brought to you by one of these companies, wordy.com. Check it out. And of course, if you want to listen to this episode, you can go and check out the Becoming Ritchie Rich podcast. You heard me? Now, before we get started, thinking cap, please. I'm feeling real dangerous. You know, the stock market's been really crazy lately, y'all. And I'm ready to get my hands dirty and make me some clean cash. All right, folks, here we go, yo. So we're going to go ahead and use wordy.com today. If you haven't done so, please sign up to wordy.com and leave a message. Like, hurry up, Rick, something like that. And today I got a new stock. I checked it out. A slight pre-screening, not a heavy pre-screen. I didn't look at anything particularly important. I kind of wanted you to see my first reactions. This one came down the pike, and I am very interested in finding out more about it. And why not do it with my family, my investing family? If you haven't subscribed, I don't know why. If you have, thank you so much. I know who you are. Now, here we go. We're going to start off with the quick version. This stock is called Orbital Infrastructure Group Incorporated. And if you're just here real quick, you want to get a quick in and out type of situation popping. First off, I like all this meat up here. It's a lot of water up here. 49 cents is not a really high ceiling. And this took place back in October of 2022. And it has since fallen on harder times. I do like the stability here. I like the stability here. And it seems like they have some pretty decent stability here and have fallen a little short as of, what day is this here? This is March 8th, okay? And right now they're trading at about 11.9. Quick thoughts. Not good. And I'm gonna tell you why, because there's a consistent trend downward. I don't see much recovery happening. Once it takes this really steep fall, I don't see a strong recovery upward. Same thing here. It seems like it finds ground and then it dips, finds ground and then dips. That's not what we want. I would say typically I would like a stock that finds ground, dips, and then comes back up. You know, I don't see the come back up enough. You know what I mean? So it dips, it comes up here a little bit, but then it falls again and then falls further. So my early and preliminary thoughts is that this stock is probably not so good. Okay, not so good at first glance. But if you want to actually stay tuned and let's do a deep dive and find out whether or not my preliminary opinions were true, then stay tuned. Here we go. The first thing I want to look at is some of the information here. PE ratio, okay, fine. Market cap 19.88 million and revenue 263 million. So this company is definitely financially sound. I'll use that word. I like what I see financially. These numbers are pretty large for a penny stock. All right, next, let's keep it looking. I want to read this here just briefly. Okay, just briefly. Orbital Infrastructure Group Incorporated is a diversified infrastructure services platform company. The company provides engineering, design, construction, and maintenance services to customers in 3 segments, such as electric power, telecommunications, and renewables. I like that. I like the fact that they are diversified. If you can't tell, I like the concept of diversification. If you look at my YouTube channel, just for a small example, you'll see that I have several types of content. I like diversification. I don't like to put all my eggs in one bag. That's why I don't only do investing videos. So, you know, I do like diversification because what it tells me is that if a company doesn't do so well in this area, or this shuts down, or COVID happens and they can't rely on this, well, they still got these other sectors that they can dive into. So if I'm being honest, I do like that. They have 1,300 employees. Again, a really large company is what I'm getting early signals of. I'm seeing a company that's, pretty large, pretty robust, and also has pretty decent revenue. Now, whether or not they're making money, that's the big question. But I like what I see from a preliminary basis. It is in the sector of industrial, so I like that as well. Okay, so some decent signs so far, nothing to run away from. Okay, the financial summary, just a quick rundown. It looks as if for the third quarter, the company reported sales was 99.8 million compared to 24.82 million a year ago. It was a net loss of 142.07 million. Basic loss per share from continuing operations. So a net loss of 100 plus million. Yikes. Okay, and the return on investment is 0%, not too bad. A lot of penny stocks usually have a negative return on investment. However, given the fact that they didn't do so well in the third quarter and they had a net loss of 142 million, it will be pretty impossible to keep this thing at a plus. So for me, I'm going to drop it down to a B minus because that's about where I'm at right now when it comes to looking at this stock. Okay, so let's keep it pushing, shall we? Next, let's take a look at the industry and the PE ratio. As you know, my favorite number is 25. It's at 31, so slightly above. Another ding. And of course, I always like to check to see if I can find a penny stock that offers dividends, and it will never happen, but I'm going to keep looking. Why not? And as far as revenue, we've already seen the revenue, and this company, or I should say this website in particular, doesn't really have updated revenue statistics on this company. It's not necessarily a bad thing. It's just something that I often look at and worry about, considering that they had losses. So that's something that might stand out to me later on, given the more information I find about it. Now, I want to look at the algorithms because the computers can, dice up the numbers a little faster than I can. And on an hourly basis, the moving averages don't do so well. So as a result, there's a strong sell here. Technical indicator, strong sell. For daily trading, strong sell. Not really surprised for a penny stock for weekly trading, strong sell. Monthly trading, strong sell. So strong sales across the board, and darn it. Okay, so the question now in my brain is this stock even a B minus? Okay, is it even a B minus? I will say this though. It did pop up in my screener. So there's something here, whether it be volume, I'm not sure yet. Okay, but we will continue to look. And speaking of volume, we can see that this stock, I'm assuming that this is from today's data. It was 1.2 million transactions. We need that type of volume because that's like the wind that pushes the waves or the waterways that we need to get paid. A stock that doesn't have a lot of volume may have you just sitting on the sidelines holding a bag for centuries. When it has a lot of volume, there's a lot of transactions taking place. Now, if we look at this stock over the last 30 days, we can see that the high was 19 cents. And that's pretty decent considering that it's trading at 0.11.9. And the average, that's the number I'm looking for, is 15.4. So I'm going to go ahead and just jump out there and say there's some money to be made here on the account that the average is 15 cents and it is trading at 11 cents. So at the bare minimum, if we're just trying to, make a quick and rushed guess, if you got in right now at 12 cents, because right now as of the recording of this video, it's still about an hour left before the market closes. I might jump in this if it's good. But if I bought in at about 12 cents, and right now after hours it's trading at 12.5, so it's had a little bump since the market closed. And the market is crazy right now. I keep hearing stuff, but I've been ignoring it. But if you jumped in right now, even at 12.5, you stand to make some money if it takes a jump to 15.4, which is the average. The high is 19. The low is 11.6. Guess what? That's about where it is right now as far as the market day. Now, the big question is the stock going to continue to tumble? We saw in the preliminary opinion where it finds ground and then dips. The stock keeps dipping, and at some point you have to start asking yourself, is this stock doomed to dip until it's just dipped out of the market, and out of the exchange and now trading over the counter, which is a stock I don't like to mess with. I had somebody ask me in my comment section about a stock that was trading over the counter, and I was going to actually do that stock today, but I'm like, yo, bro, I don't mess with over the counter stocks. What do you think I am? No, I don't do that. So, but no, there's nothing wrong with them. Nothing wrong with them. Just not my vibe. It's like the Wild Wild West over the counter. That's why. And you never really can know what's going on. But anyway, the question is this stock going to go from 11.9 to 10 to 9? Right? That's the big question that I'm wondering right now. Or is this going to be some breakaway change where it starts to surge up? Right now, I'm not seeing it. I'll be honest with you. I'm going to stay with a B minus right now because I haven't seen enough to change it. All right, but I would like to look a little further. Let's go a little further because I know that's what you came here for. We know that 30 days can be very revealing, but let's go back and really push the envelope. Let's go back an entire year. Why not? Okay, and if we do that, here's what we find. We find that the high was $2.72. That's not bad. The low, Oh, the lowest. Wait a minute, that doesn't make sense. I must have made a slight error here because that doesn't make sense to me. So yeah, I did make an error. So let's try that again. Okay, let's go back to February 2023. I was going to say that doesn't make sense, and let's hope I got it right this time. I think that I did not. I didn't do it again. Hold up, let's try again. March 2022. Bam, and then 15. Okay, so I don't know why I am not able to figure this out. Let's try this one. Okay, come on, give me something now. All right, there it is. I think that's right. Here we go, folks. Let's go back down and ooh, look at that. A lot more data this time. Okay, so the high is $2.72 as it should be, and then the low is 11.6. Now that makes sense. And the average is 70 cents. Man, let me tell you, I am on the verge of saying I like what I see. But here's the thing. And let me break it down for you, just in case you're here and you're someone who is pretty new to trading. Let me tell you why I'm getting a little excited, because right now it's trading at 11 cents and the average over the year is 70 cents. In a perfect world, and we're not in a perfect world, but if we were, you would think that you can get in at 12 cents and then say, hey, on average, the stock trades at 70 cents. So there's a lot of potential there, right? That's the key word, potential. That's what we're looking for. However, listen, back what was that? February 15, 2022, it was trading at $1.47. So guess what that means? That means, hey, it was trading here and now it's here at 11 cents. You can't look at one side of the coin and think you have the entire picture figured out. You have to look at both sides of the coin. And when you turn that coin over, it went from 147 to 11 cents. You know what that means? There's a lot of problems. It took a huge dive down. That's like you being worth $147 million, and then we turn around, you're worth $11. It's like, hey, something bad went wrong. What happened? Okay, so I can't ignore that data that lies before me. And I want to see just a moment, real quick, where the problem happened. It was trading pretty well. It was up 8% on that day. The next day it went up another 2%. We're looking for it. Look, it went up 31%. We're looking for a gigantic red drop. And I don't know why I'm doing this. I feel like someone needs to understand this a little bit better, and why I'm so excited, yet still pretty nervous. Look at this, okay? So it seems like there were a collective number of drops. Nothing like, not a huge drop. All right, here go the huge drops right here. Okay, so that's about 30% over the span of 4 days. Okay, this is where your problems are right here. Okay, you were doing pretty well. You were trading at $1.07, and by this day you were trading at 83 cents. So that's where it happened. I'm going to assume that there were a lot of those, and I'm not going to spend your time doing that. Here, 13% right there. Look at this. This is your problem right here. Bam. I don't know what happened, but that was a terrible segment for somebody. Somebody initially got in at 71 cents, and by the time this blood train had ended, they were trading at 49 cents, or the stock was trading at 49 cents. And even afterwards, they only had a 1% increase before another drop by 6%. Look, this is not good, okay? But anyway, staying in my zone, staying within my circumference. It's right now trading at 11 cents. The high is 19 cents and the average is 15 cents. That is decent. However, I'm going to go ahead and change this here. I don't know if it's a B minus. I don't see that right now. And I'm going to be very honest and say right now I'm at a C plus. Now, let's go ahead and take a look at the stock split history. Right now it's showing 0 stock splits, but we know that this stock, or rather this website, has not been dependable. Maybe it doesn't track that far, but we'll look at a second source. Here it is. And the second source tells us there were 2 stock splits. One that happened in May of 2001 and February 2012. This is a 1 for 30 and 1 for 5. I hate stock splits. I will say I'm happy they haven't had one in over 10 years. Maybe that's something to, ring a bell about. I don't know. But then again, this could be around the time when they're about to have another stock split. They're trading at 11 cents. And we know that a stock has to be above $1 in order to maintain, validity within their exchange. If a stock is trading below $1 for too long, eventually the stock exchange will start knocking on the door and saying, hey, you got to do something. Your company's burning. Okay. You got a lot of revenue. You have a lot of employees, but your exchange ranking is not so good. And as such, they might do some type of manipulative thing where they change the price, do a reverse split or a stock split. And, they artificially raise the stock price above $1 just to remain in compliance. However, in doing so, that doesn't mean the stock is actually worth that. So a lot of times when companies do these reverse splits, their stock price does go above $1 artificially, but then it drops right back down and you lose even more money. That's why I hate stock splits. If you don't know, if you can't tell by now. But anyway, let's take a look at FinViz and see if we can get some news on this company, because there's a lot going on, obviously. All right. So if we look here, we'll see that Orbital Infrastructure Group announces office expansion. Oh, that's fluff. Expansions, who cares? All right, we know you're a big company. Give us some more information. Bullish insiders bet 1.2 million. Okay, so that's a good sign, but that happened way back in November. It appears that this stock doesn't have any recent news. Now, I could be doing the company a disservice by not Googling it and looking at priors and, more relevant news, but I like FinViz, okay? So I'm going to stay here. FinViz hasn't done anything wrong to me. And let's keep looking though. Orbital Group third quarter earnings misses expectations. We saw that already. What was it? Down to 142 million? Goodness gracious. I don't know if that's a miss or a gigantic miss. I don't know. All right. Anyway, quarter three results, disappointment. Is that a disappointment or is that a shame? I don't know. I don't have a clue. All right. So anyway, we can see that there's some problems here. Obviously, I like this day. What happened? Okay. Scheduled second quarter financial results. Conference call. Okay, cool. A lot of fluff here, not a lot of substantial stuff. So next, I want to take a look at the short percentage float. How many people are betting on this company to fail? And I do that by going here. And if I look at the short percentage float, only 1% of investors are banking on this thing to fall and fall short. So that's a good sign for me. That means that a lot of companies are not sitting on the side waiting for this company to tail off like Toys R Us, JCPenney's. Great. Next, I'm going to take a look at CapEdge and look at their filings and see what type of paperwork they're filing. A lot of investors get duped by these companies because the investor doesn't really know to look at the filings. What is the company filing to the exchange? That's what we look at, right? So if we look here, we'll see that there is an entry into material definitive agreement. Notice of it. Oh, here it is. Oh, my gosh. Oh, here it is. All right. Well, I'm so glad it's at the top. Usually we have to dig if you watch my other episodes. If you haven't done so, please like the video. I don't know why you haven't done that yet. I'm supposed to be your main man. You still ain't showing me no love. I don't know why. Anyway, the notice of the listing. Here it is, folks. Here it is. We were cringing and hoping that this would not happen. Here it is. On July 19th, let me see. It was under $1. And according to the company, was provided 180 calendar days until January 16th to regain compliance. This is terrifying. You want to know why? Because it's well past January 16th. That's why. Which means at any point, this company could go the way of the dodo bird. At any point, you can wake up and get an announcement or some kind of news saying that this company is going to do a reverse split or some kind of weird public offer or something, or some kind of stock split, and then you're screwed. In my personal opinion, okay? They've had a couple of them, and I will say, as you know, I like to look at the coin, the other side of the coin, or the glass half full. I will say the fact that they've had a stock split back in 2001 and still are alive and they're still sustaining themselves, maybe that's a sign that this company is not going anywhere. You know, one of Warren Buffett's tried and true strategies is investing in tried and true companies like Snickers and Coca-Cola. These companies are not going anywhere. So this is not a well-known company, obviously, but if you look at how long they've been alive and how many times they've had setbacks and stock splits, they're still here, right? So there's something to say about that, right? And this company could be a survivor, if you will. Not everything goes perfectly, but I do like the fact that CapEdge has displayed this information for us. And I want to take a look at this other document, if you don't mind. I'm sorry if I'm taking a little long. I'm just trying to make sure that I'm giving you some good information. And here we go. And let's see here. I do apologize for not talking, but I just got to pay attention for a moment. Okay, wait, see, in accordance with NASDAQ, the company has 180 calendar days or until June 26th to regain compliance. Now, I'm not going to do this now on video, but I am going to take a look at both of these documents to understand why they both have different information, okay? And that is something I'm going to do off camera. Don't criticize me for something I do off camera, because I'm telling you right now I'm going to do it off camera. But I have to understand why this is telling me January 6th. And it could be something very simple that I'm missing, but I'm just not seeing it, and I don't want to waste your time. Look at this, June 26th. I will say this as a disclaimer. If they have until June 26th, I might jump in. It's only 11 cents. And I won't jump in crazy. I won't go buy 20,000 shares or anything silly like that, even though that many shares won't cost a lot. But I would definitely jump in with maybe 3,000 to 5,000 shares. Why not? That ain't gonna hurt. Even if it goes the way of the dodo bird, so what? And we've also seen that this company doesn't really go anywhere. They stay around. They're survivors. And, this might be a decent long play, not something I would expect money to, come back right away. But this might be a what they call it, a diamond in the dirt. And this diamond just might shine bright once again. All right. But anyway, I like this. I like this article more than I like the other one. In fact, what I'll do is just to kind of give you some closure, because maybe you need that. I would like to see if there's a date. This was filed on January 4th. And this one was filed on January 23rd. I like to err on the side of caution and say that the filing that is latest is the most accurate. So I'm going to say that this company has until January. I'm going to do more research on this because I am not exactly sure and I don't feel safe when it comes to investing on this. In fact, I'll do it right now. Why not? Let's see here. Let me see. What do you call it? You call it OIG. They're with the NASDAQ. Let's do it right here. So this is what I would do off camera, right? And I will see if I can find other. Here we go. You can't get any better than the exchange itself, right? Let's see if they have any data that we can use. And I will say, if I don't find what I'm looking for here, I will do my own due diligence, as you should as well, because I'm not sure a financial advisor. Okay, here we go. Let's see if we can find anything about the stock price or the listing. I'm going to actually just try to cut corners a little bit. All right, there appears to be something within this document about the listing, but I don't see that it's being highlighted. All right, I don't know. I'll do it on my own time because this website is my space bad, okay? I can't seem to get a clear read on this thing. And trust me, you might not be able to tell, but this site is really bad. And when you go to it yourself, maybe you'll see it. I mean, you would think the NASDAQ website would work a lot better than that. Anyway, let's go ahead and look at some other things. Let's look at this market screener website that I discovered recently. It gives you summary-based information. It tells you the strengths, it tells you the weaknesses. And what really stands out to me, and this is the first time I've seen this, there are no strengths. Okay, right away. We're going to go ahead and drop this down to a C-, okay, because that's the first time I've ever seen that on this site. Anyway, the company's score based on a relative ranking of the company within the sector comes out particularly poor. Okay, we know that. For the last 12 months, the trend in sales revisions has been clearly going down, clearly. I don't need to see any more there. I really don't, because I've seen enough. And here's another screener summary-based website that gives us some information. It kind of does some of the work for us. You obviously want to do your own due diligence, and we have, obviously, right? And this is just a way to just check what you found. If we had not clicked on these two sources, we would still have some pretty decent information to go off of based on what we've already discovered. Okay, and this should just validate. You ever been in the math class and the math teacher said, hey, here's how you check your math. This is how we're doing. We're checking our research. Earnings have declined 52%, has less than 1 year cash wage. Shareholders have been substantially diluted. Negative shareholders equity sucks, man. I'm going to go further down. I just don't like what I'm seeing. I know somebody mad. Somebody who has about 10,000 shares in this company is mad at me right now. They're going to probably downvote the video, and the investing gang is going to upvote the video to offset that one person being mad because I was unbiased and I didn't say good things about the company I invest in. Everybody at this moment, hey, everybody right now, go like the video because somebody mad at me right now because I'm telling the truth. Hey, this company is not so good, man. I'm just sorry. I'm sorry. And I want to jump in, and I might still jump in. Disclaimer. Full transparency. I might jump in. Now, we're going to go ahead and check out Stock Twits to see what investors who are already invested in the company are saying. Here we go, folks. All right, let's see. Never mind. That's what I'm doing. We've already lost all of our money. I told you. Look, I did not look at Stock Twits prior to doing this recording. And this is just evidence that your main man, Rick the Don, or Ritchie Rich in this case, knows a little bit. I don't know a lot. I know a little bit. All right. Anyway, despite all of the capital raises in the past, this company is still increasing its net debt position. I'm not sure if they're bullish or not. These guys have burned everybody. All right. I figured it out. D-. I am going to either do one of two things. I'm either going to skip this company or I'm going to invest like maybe 1,000 shares just to get some skin in the game. But needless to say, I don't trust this company. And here's 1,000 shares. Right now, if you got in, you'll probably be playing 0.125. And let's say that it reached this high over the last 30 days, which is 19 cents. Let's just see what would happen. How much money would you make? So let's see. To buy in, you would only spend $125. That was the point I was trying to make. Getting in wouldn't hurt you too bad, right? But the positive side is, if this thing had this miraculous spike, I mean, hey, you made a couple dollars. Okay, and if you sold, you would make a profit of $65. So if you're somebody who doesn't really worry about a small loss or potential loss, and you can jump in with 1,000 to maybe 5,000 shares, this might be a play for you, because look, it's trading very low. There were some of the positives. Remember, there was a million, 1.2 million transfers today, or transactions. So the volume is there. So just because the stock is not doing so well doesn't mean it can't have a good day. It may not have a good year, it may not have a good week, but it can have a good day. You can get in at 12 cents. It can spike up to 23 cents. I've seen it happen. I've been a part of it happening. But that doesn't mean you always play for that. So in my personal opinion, you do one of two things. You avoid this thing like the plague, or you jump in very modestly and you kind of monitor the growth and how it's doing. I don't know where to go with this. I saw that it is not going to have any problem until June 26th. We saw that as far as the exchange and the delisting possibility. But we also saw that later article say that they pretty much already run out of time. So for me, I'm going to, okay, that's my personal opinion. Please do your own research and make your own decision. If you decide to jump in, let me know. All right, here we go. We're going to go ahead and make that word visible. Again, check out wordy.com. It is now available on the front page. Anything that you type can be on the front page as well. And that's what we're waiting for, people to join on. Now, I do appreciate it. Thank you for checking this out. If you have a company that you would want me to check out, just leave it in the comment sections and I'll try my best. All right, stay positive. I'll holler at you. Peace.